Hey class, welcome to this video. I'm going to walk you through the ins and outs of fixed assets. Fixed assets are shown in different parts of the textbook for the QuickBooks assignments. However, it can get a little confusing, and so I want to show you how to do this. So first of all, watch this video to the end and watch it very carefully. If you don't watch to the end, you're probably going to miss some things. So make sure you watch it to the end so you can see how this is done. So here's the case, and this is one of, for example, you notice in your case, you want your trial balance to have your fixed assets under furniture and fixtures as two accounts. You want to have your fixed assets as a furniture and fixture original cost. That's the cost of the fixed asset, and then as a sub account also under accumulate depreciation. They call it depreciation, but really that's accumulate depreciation as a contra asset that goes against the original cost. So if you want it to look like this, I want to show you how to do that, because you need to get your trial balance to look as close to the book as possible. So first of all, let's go ahead and go to the sample company. Now it's really important that you practice this in the sample company. If you just jump into the case and don't practice it, you can make some mistakes, and then you're going to be in the situation of having to figure out how to fix them. Remember, in QuickBooks you can't just delete things, you have to go back and fix them, because it's designed for a real company, and so things have to be fixed. They can't just be deleted. So make sure you practice this in the sample company. Once you figure it out, you understand it, you get things to work the way you want at the sample company, then go ahead and do your homework. That tip right there will save you a lot of time. So first of all, let's look at the chart of accounts so we can see exactly how this kind of looks. So if I go to chart of accounts, I see the truck and I see depreciation and original cost. So that's the fixed asset that I have already set up. So first example, I'm going to buy another truck. And so I'm going to use the same accounts that are already set up, and I'm going to use cash. So let's see how to do that when you already have the accounts set up. Since I'm going to use cash, I'm going to use a check. So I just go to new, then I choose check. This is purely for explanation purposes, so you want to follow the book. You want to use the check number. Make sure you use the right date. If you mess up the date, that messes everything up. And I'll tell you what payee to use. I'm going to use a payee that's already there. I think there's one called Diego's Body Shop. And then when I get to the category, that's the part I wanted to show you. So what I want to do for this check is put it under category for the truck. But don't just put it under truck. You have to put it under the truck, then original cost, because you're adding a new truck. So that's the step that a lot of people miss. So put it over original cost and put the amount, let's say $1,000. And then that's all you have to do, because since it's a check, it's going to go against the bank account already. And so then you're done. You can just save and close. Now, what if you wanted to buy the truck but using a loan? So the truck account is already set up, so now you want to just do buy a new truck but using a loan. You can't use a check, obviously, because it's a loan. So what you're going to do is you're going to do a new journal entry. So if I go to new and then journal entry, we're just going to use whatever defaults here, but for your purposes, make sure you follow the instructions, put the journal number, whatever the book tells you. Make sure you use the date that you need to get this to work. And so we're going to add the truck, so we want to debit the asset, and again, make sure you use original cost. And so let's say this truck costs $1,500, very inexpensive truck, but it's just for purposes to show you how this works. And then your credit is going to be your loan, so it's going to be a payable of some sort. Usually that would be a notes payable. So we'll select notes payable and it will fill out the credit amount. If there's any description or name or anything else that needs to be done, that would be in the instructions. For our purposes, for me to show you this, you don't need that. And then you can just save it and be done. Okay, but now what if you want to buy something, for example, you want to buy machinery, but there's no machinery set up yet under fixed assets. So there's different ways you can do it, and so make sure you watch the rest of this so you can see both ways and understand it, because we want to make it to where it says machinery, then a sub-account original cost, machinery, and a sub-account for depreciation. Now, while we're on the topic, if you want to change this from depreciation to accumulate depreciation, which is really technically more accurate, then you would just go to the right here under the arrow and click Edit, and you could change that. Now, it might not look exactly like the case, the trial balance in the case, but in this situation, I'm fine with that because really it's more accurate. Then you hit save, and so see, now it says accumulate depreciation. Again, you can leave it as depreciation if you want. I wouldn't take off for that, but really that's a better way of doing it. Now, to get back to what we were saying, I want to set up a machinery, and I want to have a new account which says machinery, fixed assets, sub account, original cost, sub account, either depreciation or accumulate depreciation. We can either buy it using a journal entry if it was a loan, or let's say we're going to buy the machinery using a check. This works either way. So I'm going to just choose a pay that's already there, and again, we're using the checking bank account, check number, date. Make sure you use the right date. But what we need to do is we need to add machinery here because it's not already in the categories that's available. So we're going to select Add New, and now we get to this box here, and so this is where you really need to make sure you're careful. Select Fixed Assets, change the detail type to Fixed Assets, let's say Other Tools and Equipment, and so the name, you can call it Machinery. Now here's the part you need to make sure you do. You need to select Track Depreciation of this asset, and this is going to set up 2 sub-accounts. Now you don't need to put amounts here or dates here because we're just setting the account up. We don't want to put any numbers in there. You would only use these boxes if you were creating a new client and that already had some transactions from the past, but in this case that's not the situation. So just leave these blank because we're setting this up and we're going to use the accounts, but we don't want to have any balances there. So now if it's set up exactly like this, we can save it, and then when we select category, make sure you select for the machinery the original cost and then put the amount. Let's say $600, and it's a check, so it's going to come out of the check balance, and we can save it and close it. Now when we go to the chart account, you see machinery and you see the sub accounts that are already set up. If you did this using a journal entry, it would work the same exact way. Now here's another way in order to add an account to the chart of accounts where a lot of students get confused. So again, this is just another option if you wanted to add an account straight from the chart of accounts. So if you select New, and let's say we're going to add an account for computers. So this is an asset and it's a fixed asset. So that's going to be the account we're going to set up. Make it the same as you had for this other account. So fixed assets, computers. It's not going to impact you because we're not doing the taxes. But then for the account name, we're going to call this computers. And then the cool thing is you can scroll down and you can see that it's going to be listed in fixed assets under computers. But notice it doesn't have the sub-accounts. That's okay for now. For now, just save it. For now, we've just got the computers with no sub-accounts. So what we need to do is we need to go back and we need to add the sub-accounts. So you select New, select Assets. Now we're going to select a sub-account of computers. So select computers as your account. You can leave the tax form section alone. Whatever matches it the closest will be fine. And then we're going to call this original cost. And so if you scroll down, now you see how the sub-account's set up, and you can save it. The only thing is we're going to have to do this again. We're going to have to do it for the accumulate depreciation sub-account. Select assets, and I want to make this one again under the computers, fixed asset computers, and I'm going to call this one accumulate depreciation. If we scroll down, we can see that we have now two sub-accounts. Okay, so now we see we have computers, we have accumulate depreciation, original assets. Now, the only problem is that it says detail type is fixed assets. We want to say accumulate depreciation over here. So let's go ahead and select edit. Earlier I stated that to leave this as fixed assets computers, but it looks like that's not correct. What you need to do is put this as accumulate depreciation under the tax form section, and that should fix that. Sorry about that mistake. Trying to juggle a lot of things over here, but you can see that it's easy to fix it, and then when we save it, it gives us a little pop-up box. Just select yes. And so now we have it looking the way we want it to. Okay, so that's how you add the accounts that you need to do the fixed assets when you acquire new assets. But what about the depreciation when it's time for you to put the adjusting entry for depreciation? Well, that's going to come later in the textbook, but I'm going to go ahead and show you how to do it now so you'll be ready for then. So you do that through using a journal entry, and it's pretty straightforward. So let's go ahead and create a new journal entry. Make sure you follow the instructions for the number and the date. Super important. If you mess the date up, your reports are not going to look right. And all we need to do is we need to add a debit to the expense. So the account we'll use will be depreciation as an expense, not accumulated depreciation, but depreciation as an expense. So see how this one right here is depreciation under expenses. I'll use that one. And so I'll put a number like 45, something real easy to see. And then what are you depreciating? So let's say we're going to depreciate the truck. So we're going to put the truck in there, but make sure you select the sub-account, and it'll automatically fill that out. Description, name, that would be other things that you would fill out based on the instructions. But for our purposes, this will be fine. We can save it, and then if we look at the chart of account, we'll see it shows up there. Now notice under the trucks, we have the accumulated depreciation at $45. I know there was a lot to go over with the fixed assets, but there's a lot of questions that come from this that often I see students confused with. Just a couple of things to remember. Make sure you practice in the sample company before you go ahead and work it. Take my word for it, it's going to save you a lot of headache. Now you're ready for fixed assets. This will cover you for the course.